Okay, good afternoon, everyone. This is Kristina Kuprina of the update on the economy and socially responsible investing. First, I would like to thank everyone for all the questions that were sent in advance. I know that many of you are not able to attend the time of these webinars, but are looking forward to the recordings later. So thank you very much for sending your questions in advance. I'm sure to cover the topics that are most important to you. So today I thought what I'd do is do a brief update on the economy, a couple of things that have changed in the last 2 weeks, answer 2 specific questions that people have presented about the economy. The rest I'll save for later. And then jump right into socially responsible and impact investing. I want to really encourage people to use the chat function that you will see on the bottom of your screen and type in questions that you have from that Q&A standpoint. Reason being is I will answer as many questions as I can during this time today. So questions arise while I'm talking or questions that you have now, please don't hesitate, type them on and I will answer them throughout the meeting as I do. So I'll start with jumping into the economy. A lot of things have happened in the last 2 weeks, certainly. I'll start with probably the topic that I'm getting the most questions on was with a rising level of COVID cases and the possibility of more shutdowns, how may that impact the economy? And this is a really important one right now to talk about because there's a lot of fear out there that the fact that the case levels are rising, not across the nation, but in specific areas in specific states, and there has been some rollbacks or halts in some of the openings, as well as some rollbacks in specific areas. What happens if we go back to the way we were back in April? So I bring this up because, again, big topic of the day. First, I want to say it is highly unlikely that we will go back to where we were back in April. And there's a lot of reasons for that, but I'll touch upon some of the biggest ones now, which is we know more now than we did when the outbreak first hit our shores. We know a lot more of where the risks are, the people at risk, a bit more about the disease, and what areas are at highest risk. So originally when we kind of shut everything down quickly, and again, I'm using the term we as a nation without any specific group or person or whatnot. When we shut everything down, it was because we really had no idea what we were dealing with. We didn't have a lot of information from China, and all we knew is it was very, very infectious, it was spreading rapidly, and we needed to take action. So we shut down the economy. And some things were allowed to stay open with the idea of people needed to go to the grocery store, they needed to get essential services. So some businesses were allowed to stay open, many were shut. It was kind of hodgepodge in how things were done, but it was the best we could do at the time. And as time passed, as we learned more about the disease, we learned a little bit more of who's at risk. And we also saw the seriousness of the social and economic impacts of the shutdown. Some states, and states did this in different levels and different time frames, begin to open up parts of their economy, and then in some cases, nobody went entirely back to where it was before, but many states have opened up further than others. So that being said, now we've had time in this semi-open state, and what is happening? Well, 2 things are happening. Number one, we're testing a lot more people right now. Let's see if I can give you the testing rate. Yesterday, 648,000 tests were done in the United States. I think California now has crossed over 100K a day. I'm not sure if that's every single day or just some days. I don't track these things that closely. But we're testing a lot of people. Why are we testing so many people? Testing is widely available. It's free. And you don't have to be sick to get tested. So anybody, I know I can speak for Santa Cruz County. If I want to test, it's a 15-minute drive. I show up, I get tested. Now, it may not quite be that simple, but I'm saying is there's no limitations. So many more people are getting tested. Many businesses, as they're opening up, are requiring their employees to get tested. Some businesses are requiring their employees to get tested periodically, especially in environments where people are working very closely together. And so many more people are getting tested that are not sick or worried about being sick. Because think back to when this started. The people that were getting tested, if you could find a place to get tested, were people that were either sick or had thought they had been exposed. And even then, it was hard to get the test. Now, it's much more potent. So yes, more and more people being tested, more positive cases. 40 to 50%, depending on the part of the nation, are asymptomatic cases. And we have not yet seen an increase in deaths. Deaths are still declining. Yes, I know, increasing cases, deaths follow a couple weeks out. But we'll see, because 2 important components to it, and this is, again, comes to the economics of it. The average age is dropping down into the 40s. Okay, these are cases, so positive diagnosis, are in the 40s nationwide, and in as low as the 30s in places like Florida. So a lot more cases. The average is bringing the average age down to a level where we don't tend to see as many deaths. That's number one. Number two, the doctors and the hospitals and all the experts that are on the front lines saving our lives and keeping us healthy every day, they're getting smarter about the disease as well. And a couple of examples that were told to me directly was this. Number one, ventilators were not a good idea for most patients, and in fact often made the situation worse. And there's no blame here, there's no fault, nobody knew, they did the best they could, but it turned out that a lot of the conditions that came about as a result of ventilation led to much more serious outcomes, even death. Gastrointestinal, heart, kidney failure, etc. Outside of my expertise, but I bring this up because in talking to healthcare frontline workers, emergency room workers, was told is that they found that in some cases they can roll people onto their bellies and have better outcomes than a ventilator. Again, won't delve into this too far because it truly is outside of my expertise and I'm going with what I've told and what I've read, not with what I know. However, the idea of it is that we know more now that we can have better health outcomes when people get sick enough that they end up in the ICU. Another thing is hospitalizations will also increase because what we've learned is that a course of drugs, I think Remdesivir, if I'm pronouncing it probably one of them, can make much better outcomes. And because of this, in order to go through that course of treatment, you're required to be hospitalized for an extended period of time to do so. So in the early parts of the stage, you showed up sick to the hospital, you weren't seriously ill, they told you go home, stay quarantined, rest, whatever. They sent you back home. Now they're like, high risk, you're coming in, you're going through this course, we want to save, not risk your life. So different ways of treatment, more and more cases, but more and more asymptomatic in younger cases, is at the point where it's not really, from an economic perspective, warranting a major shutdown. Now, I want to bring up the fact that even with the higher testing rates and higher case rates, we are also getting more outbreaks in certain parts of the nation. It's obvious. There's a way of seeing that, and that's largely based on the reopenings, more people closely together. What is consistent about this all over the world is where outbreaks happen is when people are close together outside of their household. So, this is the kind of the topic, what's causing it, right? It doesn't matter whether people are getting together in bars, at protests, at political rallies, in their own home with friends and family. If people are held close together for an extended period of time, is the highest probability of an outbreak. And that's happening. We're seeing a combination of all these things happening. So you could see potential rollbacks in certain areas. I'm not sure from an economic perspective if that's what the effects are going to have because it depends on how long and how it's targeted. But it's not really, at this point, a lot based on science per se. For an example, a bar is closed, but a bar that serves food's not closed. As long as people are close together, we're going to have issues. So this will be bar watching over a longer period of time. But because of all the factors I mentioned, it's highly unlikely that we're going to get anywhere like where we were before. Now that is, again, the shutdowns, what the government will do. People will be nervous. People will be cautious. People that were starting to venture out may pull back in their hole a bit if they're afraid of getting sick. And as more is learned about this virus over time, we'll have better ways of targeting what we, I want to call it allow, but what we open and what we close. It's a lot easier to close a bar than to tell people they can't protest. In fact, I'm not even sure that's allowed. You can tell people they can't protest. So it's a combination of a lot of factors. A combination of factors also is learning what works, what helps prevent it. There are a lot of studies coming out now that there are, what do they call them, super spreaders, and there are also people that are unlikely to spread. So 2 people, positive COVID cases, apparently some people hardly spread and some people are super spread. And what causes that? I'll leave that up to the scientists and the experts, but that may even be able to further define how we protect the spread of the disease because it's all over the world and we at this point have to learn to live with it. So that's kind of the high level because that was the majority of the question that kind of came out about that. Economically, though, the data is improving at a pretty rapid clip. Today we got ISM manufacturing, which is a big deal number. Anything below 50 is contraction. Anything above 50 is expansion. It was expected to be at 49 was consensus. We came in at over 52. It doesn't sound like a lot of difference. It's a big deal, though. It's a big deal. 1 month after manufacturing begun to open, we're actually getting into expansion territory again, which is, it has a lot to do with the strength of the economy before this happened. It has a lot to do with the stimulus that has taken place by the U.S. government and the Federal Reserve. The other thing is there's a lot of modeling that can be done in projecting earnings with companies, not using current data because everybody knows it's bad, And there's a lot of opportunity as far as valuation is concerned. And that's why I expect, as I said earlier, that we'll have a lot of volatility throughout the summer. You're going to have these big down days. You're going to have a lot of this choppiness as the market's finding its legs. But it just shot up 2/3 from the bottom back, just over 2/3 of the bottom back in March. So this is a consolidation phase. It's going to be volatile. It's going to be frustrating and sometimes a little scary. But as long as the data, underlying data, continues to improve, it will be positive. I also want to stress not all industries, not all businesses, and not all sectors are going to grow out of this at the same rate. There are some huge bubbles taking place, believe it or not, within the market right now. There are companies that are way over their valuation, and they're probably going to get hit at some point, and they bear very, very close watching. A little too much optimism in some areas, but it's a very small amount of the market. Not by market capitalization, but a small part of the market. There's also an area of the market that's really unloved right now that stands to run quite a bit as we get into the next stage, what I call the slower, softer stage of the recovery. There's a lot of opportunity because they weren't the big newsy companies. People weren't seeing what they were doing, but they put a lot of effort into redoing their supply chains, redoing their technology, restructuring them. It's going to be some amazing things coming out here, and that's a lot of area that I'm focused on right now. I did talk a bit about that previously. Anyone who wants to go further into that, in the interest of time today, please reach out to me and I'll explain, if you're a client, specifically what I'm doing in the portfolio. If you're not a client, I cannot give you specific recommendations, but at least I can go further into the story if you're interested. So again, that's kind of the broader thing on the economy. I wanted to touch upon a couple of data points that I've been talking about pretty much in each one of these, which is when you can't use traditional economic data because the data is lagging, so it's a quarter old, which doesn't do any good when we were here and now we're here, right, with the suddenness of the drop. We look at a lot of real-time data. And one of which that I've mentioned a lot is we're looking at box office sales. We look at airline travel by TSA checkpoint data. We look at gasoline sales. Okay, and there's a lot more of it, a lot more that we look at there. There's a lot of real-time data that we can look at and kind of see what are people doing, especially in traveling. One that really I've been talking about a lot, but I'm going to bring this up again with the current number, is TSA checkpoints. In the low, we had 80,000 people flying on a day in the United States. 80,000 people. Okay. Last week, last Sunday it was and whatnot, we had just a hair under 600,000 people. Now remember, there's essentially no business travel happening, no international travel happening, and an airplane is the least socially distanced place you can imagine yourself probably. People are still flying at 600 people a day and rising. I know that sounds like, wow, that's great. Look at all those people flying. We used to have 2.5 million people flying every day. So we're still way below where we used to be, but people are going. But a bigger one I want to mention is people are still traveling. And they are traveling more now by car than by plane. So gasoline sales, which is one that I really wanted to pick up on, was down 50% at the height of this back in April. 50% down gasoline. So still not nearly down where air travel was, but just down. Now, last week, it's only down 9%. So that's an important thing to see, and that's why you're seeing the rise in oil prices and whatnot. People are traveling, they're driving, they're not flying, and his business is picking up as well. I think there's one last point that I wanted to pull up here, and that was the stimulus, round perhaps 6 now, depends how you count them. So the Democrats and Republicans are backroom negotiating, which means it's not official yet, but they're sort of talking to each other, trying to put together, so I should probably say the senators and the House, try to put together their plan of what the next stimulus might look like. So the Democrats threw out a wish list of a $3 trillion stimulus plan, kind of as a negotiating point, and now, of course, they're in that process. We don't quite know what it'll look like yet. I get little whispers in my Monday morning calls out of Washington of things they're talking about, but talking about doesn't mean it'll be part of the actual bill. 2 areas that we want to watch very closely. One is unemployment benefits. I've mentioned this before, so I'm just going to be brief on this one. If you want the actual data, because it's pretty eye-popping, I will share it. But many people, the majority of people unemployed are making more money unemployed than they were employed. And that ends the end of this month. So a big part of what has stabilized the economy through this opening in this recovery period has been the fact that there were less people who were financially impacted because of the very generous unemployment numbers. And so this is a very important point. So there's a lot, unemployment is very robust, is part of the CARES Act, part of the stimulus. It ends the end of this month. And that's a big deal economically. I'll take out obviously the social impact is critical because people will not be able to pay their bills, pay their mortgages, pay their rent, pay for food. It's going to have a huge financial impact on families because the jobs are not all back yet. Some are coming back, but nowhere near where we were, and especially in the service sector. Those jobs may not come back for some time as business travel, conferences, and the like will be curtailed for a while. So there's not jobs for everyone, and so how do we support these people? Do we give this continuation of the very robust unemployment that's there now? There's some risk to doing that, significant risk, especially when as employers are calling people back to work, and people don't necessarily want to come back to work. It's a pay cut. But on the other hand of it, if people can't support their family and pay their bills, the economic impact of that is massive. 2/3 of the economy is consumer spending. If people don't have money, they don't spend. It affects the economy, and it affects it in many, 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 many ways outside of the social impacts of people not having enough. Okay, so the talks that are happening is there's going to be some form of extension. It may not look the same as it does currently, but it's almost certainly going to be extended in some fashion or another. But there's a lot of other things that they're talking about now, like money towards education. So for an example, if people want to maybe get job skills, to go back to school, to take vocational training, that there's going to be money there for that, which could be a really big impact for people who are working a service job with not a lot of opportunity, have the opportunity to be able to go to school, to go to classes, to go to vocational training, apprenticeship, and the like, get additional skills, and then have a higher effective wage job there on out. There's a lot of really interesting, I want to call it positive things coming out of what they're talking about. So watching that really closely because that's a big economic one. Number 2, are there more stimulus checks coming out? And that's a wild card. It's an absolute wild card if that's happening. We don't really have clarity on that one yet. Number 3, and this is a really important one, is there is a big group of people that, I don't know if you know the Medicare term of the donut hole, right? A lot of stimulus was sent out to businesses, to individuals, stimulus checks, unemployment, this and that, next thing. But there was this group that was completely missed, and had little or no resources during this time. And that is the sole proprietor, self-employed individual, doesn't have employees, didn't qualify for a lot of the stimulus, and there was no program, there was no money, there was no support, and many of them are businesses that were forced to shut during this time. So ways to come back and review what was missed, who do we need to help, who needs more help. There's a lot more fine-tuning of this plan. Now that's the positive, that's the logic. There's so much to it. I would take up this whole meeting or this whole webinar talking about it. The details in there, and I don't think it's too pertinent yet because they'll negotiate, and they'll probably look entirely different by the time it's done. But a tremendous amount of optimism. Now we say, wow, that's amazing. You mean they're actually talking to each other and agreeing on things and actually creating together? That doesn't sound like Washington. Well, it's an election year. And everybody wants to win. And it's really hard to get elected if you're the one that wasn't helping the economy and the people of the United States during this time. So there's almost a race to who's going to help the best. Now, there's a lot of differences of opinions about it. There's definitely a focus, and the president has made it very clear that he'd like this to be a focus on infrastructure. Do we do a big infrastructure plan right now? Well, the interest rates are so low, it's the best time to issue debt. If we're going to do it, let's do it to support the country, the taxpayers who would benefit from the infrastructure, and get people to work. Great idea. The Democrats tried to do it under Obama. The Republicans have been trying to do it under Trump. Maybe now it'll get done. I don't know what it will look like, but it's certainly an interesting idea if they can come together. Now, come together is what they do privately in the back room. Publicly, it's unlikely because, again, it's an election year. But overall, when it's election year, I do see it as a point is that they're going to want to do what needs to be done to help the American people. It won't be perfect, but more will be done. Which brings us to, oh great, more debt. How much can we handle as a nation? Surprisingly, we can handle a pretty big chunk more for the foreseeable future. I'm going to save that for a future webinar, but the chickens are going to come home to roost on this. Originally, I've talked on this before, I was looking at about 2030. All this debt may pull it in a little sooner, but it's not going to be next year. It's not going to be the next couple of years, and there are ways out of it. It's going to depend on a lot of factors. But we can, at this point, do it. It's a lot wiser to issue additional debt to fund things like infrastructure or social programs. Again, there's many, many things that can be done, things for the environment, things for social infrastructure that would benefit society more than benefiting a one-off check that people can spend. So there are things that would be more on a national interest, which would be a rational and justifiable reason for issuing debt as opposed to political reasons. Again, I'm bringing these up because they all have important impacts on the economy. And watch closely over this next month. There's going to be volatility around it, maybe the markets, maybe not, certainly politically as they negotiate this. This is a major thing to watch. So that's kind of a broad overview on the economy. Please, again, pop your questions in. I'm going to move over to the social aspect of it, and I will get to the questions, though. So definitely add them to the list. Okay, so I want to just first kind of define socially responsible investing because it's sort of a vague term that means a lot of different things to a lot of different people. And then I'd like to talk about how this may be something of value to nearly everyone, even if they didn't think it that way. At first, socially responsible is a broad term. It also goes by ESG, or environmental, social, governance. It's also got values-based investing, to the values, impact investing. They all mean something slightly different, and even the terms are not hard definition, but for the purpose of this webinar, let me kind of cover what it is. Some people, and traditionally and early on, socially responsible investing was eliminating things from your investment portfolio that you didn't want to support. For example, I don't want oil, I don't want tobacco, I don't want weapons. No, don't want. And that's one way. Another one is investing in things that you want to see, which is the example environmental. I want to support companies and industries or whatnot, or say companies for the purpose of the stock market, that are doing things that are good for the environment. They're doing things to help that cause, right? I want to invest in things that are doing things that help specific social issues, equality, et cetera, et cetera. So that's I want that in my portfolio because I want to support it. Now there's another prong to it that I want to talk about. It's a bit called impact investing. And again, these terms mean different things to different people. They're not hard definitions. But for the purpose of today's webinar, impact investing is I want to put my money behind an investment team that buys shares in companies because they want to have a seat at the table to affect change within the organization, which is a really intriguing thing, right? So if you're looking for equality on the boards, if you're looking for equality by gender, by race, by sexual orientation, if you're looking for more environmental focus, what are you doing to help with climate change, for an example? Whatever your beliefs are, whatever your purpose, your intention, what you want to see in the world is, there are groups of investors. These are large. This is generally done through funds, so they're reputable. There's oversight on them, and they go in and they buy up enough shares that they can affect change. And some of you have heard me, and I've had speakers on this subject before talk about this, and that's a pretty intriguing thing because if you don't put stuff in your portfolio you don't like, yes, you're buying less shares of that company. If you buy stuff you like, you're supporting people that are doing good. All good and noble things to do in a portfolio. But the impact takes it a step higher, which is how do we create more change? How do we create more change? We invest alongside of investors that believe specifically in the things that I believe in. Because the idea of socially responsible is very, very broad. It touches upon so many different areas, okay? Everything from affordable housing, we talked about the environmental aspect of it is. There's a lot right now around never can use this term properly, but by diversity, it's a really big focus. Equality along the Black Lives Matter, and how is that properly represented within companies, or what are companies doing to support that cause? Climate change is a really big thing right now. What are companies doing to minimize their carbon impact? Environment, income inequality, big one right now. Something I'll talk a little bit more about. We've all heard the fact that there's more and more money here and less money here, and how do we balance that out? What are being done? So whatever your passions are, it goes beyond that. If your passions are the arts, if your passions are social services, anything that is a passion of yours can be represented in a portfolio in two of those ways, either investing in it or investing in companies that support these things. By creating change, it feels good. And the nice thing about as investors in these, I get these reports all the time. I usually don't send them to the clients unless they ask me to. Mostly because I don't want to spam them, but they're available to them, which is, here's the cool stuff we did last quarter or last year, annual report. And you feel really good about it. It's like, okay, not only is my portfolio doing well, because obviously we don't invest in things that don't make financial sense, right? Portfolio doing well, but I'm helping by money I already have invested to help affect the changes that are valuable to me. And I bring up the valuable to me from an important point. You can customize these, and large investors usually do. For again, as an example, one growing area is ones around spiritual belief. Okay, so if you're a Christian and you want to support specific companies or beliefs around your religion, And if you don't want to support specific ones, same thing. If you're a Catholic, you can do that. If you have more of a metaphysical view, you can do that. You can really drill these down and customize them towards your religious beliefs, spiritual beliefs, I should say, broad spiritual beliefs, more than environmental or something else like that. So these can be very, very highly customized. I work for a number of nonprofits. I often customize these to specifically the nonprofit's cause because it's a really nice thing to be able to do. You can do this through equities, through stocks. You can also do this through fixed income for a more conservative investor, a more conservative sleeve in a portfolio. An example of that is affordable senior housing or affordable housing. I didn't want to limit to senior housing. There's some wonderful, even in the state of California, taking place in cities like Santa Rosa and Oakland, for an example, where all the people that live there are Section 8. And it's not just housing that you're supporting. Within that housing, they have case managers. They have people driving them to appointments. They have social activities. There's a lot more to it, and that's an investment. Why is it an investment? Because these types of funds started because banks were trying to meet their mandate of I'll call it community service. That sounds like a criminal thing, but there's a version of that where banks were giving back to their communities. I believe they were mandated to post the financial crisis. And a way of doing that was to invest in these types of things. Well, that became so popular that other investors piled in wanting to also support this as well and get the income front. So it's an investment paying them income, but it's an investment that they could stand behind because it matches their values and their beliefs. So that's just a couple on there that I wanted to talk about. Some other areas, these are some newer areas that I wanted to talk about that are now part of these investments. Immigrants and refugees, programs to support. I talked about racial equality. That's grown massively. It's probably the biggest request I'm getting right now from clients is to target that area. Always environmental, but that's added quite a bit. Economic inclusion, which is why I'm going to talk a little bit more. Workforce housing. It's affordable housing for people to stay close to the place they work. It started with housing for farm workers, but it's been expanding in a lot of areas of the United States. Other ones is portfolios targeted to industries that would benefit from the Green New Deal, and basically that are prepared for a swift transition to a sustainable low-carbon environment. Gender equality, I talked about that. Aligning faith and finance, that one's along the line of the religious, and the affordable housing. So those are newer, in addition to the traditional areas that people want to support. An area that wanted to kind of touch upon in a little more depth is the climate change area. Something that's happened regardless of your position on the subject, because I know there's a lot of different a lot of different belief systems around it. Let's, for the purposes of conversation, say climate's changing, there's data, we don't know what's causing it, there's a lot of different ideas. I'm not saying that's my belief. I'm just going to put that out there as a platform for this because I know there's a lot of different viewpoints on this. But let's use the most likely look here and say, what do we need to do to reduce, let's say, carbon emissions are the cause? Well, what do we need to do to change it, right? What do we need to do to change it? And companies now are seeing the benefits to this on a financial level. So originally it was like, no, it could cost money, we don't want to do it. But now there's understanding of the fact that this has an impact on their profit. In addition to the fact it has an impact on how they're seen. Because more and more of these impact investing firms are coming into companies and saying, we want to see your plan for how you're going to reduce your carbon emissions. Okay? So that, and it doesn't matter what the belief, that's why I put that platform of no belief here. It doesn't matter what the company's belief is in regards to climate change. It matters the fact that they're now having a social pressure and a financial pressure to do so. And the shareholders, they have the control to be able to make those changes. And it's not as onerous as just the carbon reduction. It's also what can they do to help replenish what's lost. Okay, what can they help to do to inspire and motivate other people to do? Okay, so I'm using the example again, the people from that platform I put out there that have no belief in it, no really focus on it. It's motivating these companies to change because there's a social and a financial pressure. A shareholder has a right. A big shareholder has a lot of power, and they can affect change. And even if you're not a big shareholder yourself, if you're alongside the big shareholders, you too are supporting that change energetically and just by the nature of the work that they're doing at a board level with voting and whatnot. So let's take it to the other side of the platform, okay? Easier one for me to take it to, which is climate change is real, it's happening, we need to do something about it, okay? So this is the inspirational side of it. The inspirational side of it is that you're on board, the company's on board, they believe in this, but they don't know how to do it. Like, we don't We don't pollute. We're not involved in fossil fuels. We really can't do anything about it. But we believe and we want to do something, want to be part of it. Well, they work with them how they can. How can they have an impact? And it's as simple as things. And I'm going to say one thing that I'm hearing from the tech companies that I'm talking to is one way of them meeting their desire to reduce their carbon footprint is potentially significantly reducing travel post-COVID, reducing travel because they found that they can do much of their meetings and much of their out of the area conversations and whatnot. They can do much of it with Zoom, just as we're talking right now. So a company can say, not only is it cheaper, I don't have to fly my people all over the country, but look how we're reducing our carbon footprint. And I'm behind this. So like I said, I use those two platforms, one platform of disinterest and one platform of support in relation to climate change, showing how change can still happen in both situations. So it's amazing impact. And the impact is that it's conscious capitalism, using capitalism for good. It's using it to affect the change that you wish to see in the world, right? And that's happy because more and more and more companies are listening to a lot of these causes. They want to make a difference. And you're seeing this right now with what's happening with the protesting along Black Lives Matter. You're seeing this widespread, regardless of your thoughts on it, you're seeing a widespread change with corporate behavior, corporate funding, billions of dollars that banks are putting out for community support. There's so much going on right now, and it started on the individual level, and it went from the bottom up. And that's how the same thing this is doing with investing. It starts at individual level, the bottom up. And it's very, very impactful and meaningful. But I want to talk about something a little bit more than that. When you can align your personal values, whatever they may be, behind anything that you do in your life, it magnifies the power of that. There's a connection to that. There's a belief in it. So if you're already investing, take a look at your portfolio. If you're my client, let's take a look at it together because I may not know something that you wish to have in there. And I'm more than happy to figure out, provided it makes sense for our investment strategy and your risk tolerance and looking at this because there's a lot of things out there. And all I have to do is know. And we can incorporate it where important, where it fits into the portfolio's plan and your risk tolerance. For those who are not my client, it's a good thing to do to take a look at it. If you're interested, I'll be more than happy to do an overall screen and give you a sense of where things are. But that's also if you wish to, you can talk to your own financial professional and say, I want to see specifically how we're supporting the causes that are most important to me, and have them do that screen for you as well. And the other thing is there are some investment companies that are more supportive to these causes than others. I'm not going to mention any names for the purpose of this, but as those of you who know Sequoia, I don't work for any of the investment companies, so I have no bias. I'm only paid by the clients for services provided. But there are some that I avoid because they're resistant to this idea. And I like the idea that the shareholders have the voting power. But what happens is a lot of large fund companies own the bulk of shares for individual companies, and they have the voting power. And that's the one thing that makes the individual investor weaker. If XYZ, low-cost fund company has the bulk of the shares, they have the voting power. And if they don't believe in any of this, if they don't believe in any of these social causes, if they're just looking at keeping costs low and the company and whatnot, they rule the roost, right? They'll always outvote us, everyone else. So the way of doing that is aligning with the other ones that are coming in and growing very large, and they're doing that by public engagement. So when you find what is in your heart, what it is you wish to support, and you talk to me or to your financial professional, and you have them do a deep analysis and say, is anything I don't want there and is anything I want not there that we could incorporate, then you get more excited about your portfolio. And again, none of this has to affect the performance or the goals or the purpose or intent of the portfolio. If it does, I'll tell you and we can make that decision separately. It's neat, even if it's a portion of it, to say, I know I'm making a difference. I know that I'm impacting the things that are really important to me. I know I'm not supporting the things that I don't wish to see, and I know I'm supporting the things that I wish to see. And there's something really powerful about that connection to your money and to your investments that it just feels good overall. It's not just this black box of things. It's something that you can get behind and support. Not all things are possible to support, and not all things make sense. There's a big difference between investing in an unknown startup, we're going to fuel the world with algae company, than a large, well-known, well-financed company that's willing to make some changes in the way they do things. We have to look at that and look at it closely. These are powerful ways to affect change in the world. And mean, we're seeing in this time of great change that we're in, this is actually a time when things are ripe for change. Companies are ripe for change. They're very open to it because they want to be connected to society and to people and to their views. So I'm going to stop for a moment because I want to make sure I have time to cover all of the questions. Like I said, please don't hesitate to ask the questions that are here and focus on this. And also I'm going to touch upon just briefly upcoming webinars as well. Let's see. Are you predicting loan defaults this month and impacts from this? Yes, absolutely. We're already having defaults. We're already having bankruptcies. The biggest reason we haven't had too many is there's a tremendous amount of free cash and companies has spent through some of it. But the reopening has a lot of companies holding on to see how it goes. So let me take an example of a small restaurant, not a publicly traded company, small restaurant. If the restaurant was able to squeeze through the shutdown or the carry out or pick up only period of time, squeeze through with PPP loans, with personal capital, spending all their cash, mortgaging their home, whatever it took, keep us alive. And then things start to open and there's that hope and there's that optimism, like, okay, we're going to get back to where we were. We're going to be okay again. Well, that's actually the hardest time for most companies because it's not going to come right back where it was. So, yes, sure, some people will flood and pack the bars and pack some restaurants, but many people are still very cautious. Many people are still staying at home, and they're not quite ready to get out in public and sit down and have a meal yet. And so that's the period of time in which hope is lost and companies may close. Okay, there are also companies that are heavily in debt. They just simply don't have the resources to survive through this time. So reopening, stock market up 2/3 of the way, optimism returning. Virus, while case levels growing, not as scary as it probably was a couple of months ago. Yes, positives. It inspires people. People do things. But it's not going back to where it was back in January for quite some time. That's just the reality of it. When I say I'm talking about the economy. The markets lead the economy. The economic recovery is going to take a time. Even if none of my modeling that I have done is modeling for a vaccine, there are companies that have said they'll have a vaccine as soon as September and October. Unfortunately, I'm not sure if I know one's not. I'm not sure if the other one's even located in the United States. But there's a possibility of a vaccine, which is very optimistic and a wonderful thing if it works and if it's successful. It changes the game. The markets will rally, possibly even to highs. Don't know yet. The economy, the optimism out there will be, yay, vaccine, we're saved. And then the reality will set in that it takes a long time to vaccinate the whole world. It takes a really long time to vaccinate even the whole country. So everything won't be back to normal, but there'll be a lot of optimism there. So I wanted to make sure I brought that up. And there are some things that could happen that could change all of this. Barring a vaccine, though, the recovery will be slow, and there will continue to be defaults. Okay, so the questions. Question here. The 5 largest tech companies take up 20% of the market. What's the potential risk of that? Any concerns? Really big concerns, especially because the valuations are in the stratosphere of these companies. A lot of the market's recovery has been, imagine a pyramid, really small number of companies. Okay, S&P 500 is market cap weighted, and a lot of this growth has happened with a few companies, a very few number of companies, most all of them in one sector. And it's a sector that has not really been heavily impacted by COVID as some other sectors, being the technology sector. The valuations are pricing in a perfect world, and there's a lot of risk to it. Anytime a company is significantly overvalued, there's risk. There's risk. The market's always their weighing mechanism. Eventually, it will get knocked back to price. But something that didn't even get any news out there with all the COVID stuff is really, really important is that the Treasury Secretary in the EU got together, I believe it's the EU or the portion of the EU that deals with these things. Europe wants to put a tech tax out on these large companies, large US companies. It's a pretty onerous tax. And they were negotiating to try and find a solution for that, and the negotiations did not go well. If this goes through, this is probably going to have a pretty significant impact to earnings of these companies. In addition to the fact that a little bit of a tug-of-war about the idea of the social media platforms and their responsibility or not responsibility for flagging content that goes against, I guess they call it, against their terms, user terms. An example of that is news organizations have a responsibility for the accuracy of the reporting. I know we can all really laugh at that one because news doesn't seem very accurate anymore. But because they're curating it and they're deciding what they're going to put out and not put out, they have some degree of responsibility. I apologize, I don't know all the technicalities about this. The social media, Facebooks and the like, hard to say they're a platform and they're not responsible for content. And that for a long time it was like a free for all. You could post anything you wanted. And over time they've started to try and get more and more involved of certain content, not allowing or flagging. Also trying to make sure the accounts are real to minimize the foreign interference in a lot of what was going on. The tricky thing is that gets really slippery really fast. Who determines what's real and what's fake? If someone's opinion is different than the mainstream, is that now fake news? It's very, very difficult for them to do. And there's going to be some pushback, I think, from the government, either additional regulation or otherwise that will likely come down the pike. So there are some risks in this sector that I think are not being priced in and not being fully realized, and it's something we have to pay a very close attention to. But this is the reason for diversification. People say to me, I have an index fund, I'm diversified. No, you're not. 20% of your portfolio is in like 4 companies. They're not diversified in the least, right? If someone comes to you and you look at their portfolio and goes, oh my gosh, you got 20% of your portfolio in like Apple and Google. Are you crazy? But they would look at it like, oh no, you got 500 companies. Not really. Market cap weighted. You don't. So there's a lot of risk in the index funds right now, and it bears very close watching because diversification is not necessarily diversification if you don't fully understand that weighting. Yeah, really important. That's a good question. Rising number of COVID cases, I think I already talked about that one at length. There's no shortage of information about it, and I think I talked about the economic impact. There could well be further shutdowns, and it could have an impact, and the markets could be volatile, but unlikely to get back to where we were. Oh boy, this one. Oh, dangerous territory, Kristina. Are the protests causing the outbreaks? I have no idea. I don't, and I don't even think it will ever be known. It's really hard to know where people caught it unless they know they were exposed to somebody. You know, like if you're living in a house with somebody and they got it, you kind of know where you got it. But public things like this, I don't think it's really known unless there's an actual defined outbreak, and protests are not something like a bar where you can isolate everyone. So the truth is, yeah, any of the, gatherings, huge gatherings at beaches, out in parks, protests and whatnot, I don't think it'll ever be known. Logically, certainly it's possible because you're getting people crowded together. And when you're really close together, the masks, well, I'm sure they help, but they're not as effective. So possibly, but way beyond my expertise, and really I think it's something we're not going to know. Why is the stock market rising when the news is bad? I think I covered that one pretty well, so I'm going to skip past it unless there's more time. Oh. What's the difference to the economy if it's Biden or Trump? Okie dokie. I actually have my preliminary Biden portfolio changes built out. They're, of course, a rough draft at this point, which are the areas that will likely be impacted in a positive or negative way if he's to be elected. A big wild card is we don't quite yet know who his VP will be. And one of his, at least from what I understand, one of his potential candidates is somebody that will really change this for me because of her viewpoints on a lot of things in the financial industry. So until we know the VP, I think it's going to be hard to really finalize that. But there's certainly areas that I can see would probably be at risk and be hit. And there's areas that will likely possibly do well. Like I said, I don't want to say it's too soon. Would be a different portfolio than what I would call a Trump portfolio, which is really, honestly, at this point, really an unknown as well. Because, like I said, it's in the beginning when he first was elected, it was not seen as he was not the expected candidate, he was not the expected winner. So it was a big rotation pretty much immediately after he was elected in the markets to the sectors that he had talked about he was going to be working on or promoting in those areas right off the bat. I think I'm going to look at this a lot more closely. I'll probably talk about this in a lot more detail once after, I believe he nominates his VP in August. So sometime after that, but well before the election, I'll probably get into more sectors that will be like more or less effective when I know more information. But certainly, yeah, definitely a different portfolio in a Biden presidency. Again, I also want to stress it does matter to a degree the makeup of the House and Senate. There's a big difference between if one party controls it all, it's a very different portfolio mix than if we have a combination of Democrat and Republican control. So that's a very important one. Again, but I'm going to save that for closer to the election. How does socially responsible investing affect portfolio returns? Can it make them lower? No, not necessarily. In fact, I will say right now, more and more companies and more people are putting money behind this. It's becoming more and more of an important issue. People are becoming more engaged and involved with their portfolios. So if anything, it could potentially, and I use the word potentially, affect it to the positive. For clients that don't have any investment restrictions on me, I'm always choosing what's best for the client and best for our objective, given what's happening in the markets and the economy. So even clients that don't specifically state to me that they want socially responsible or ESG or impact, I still have it in the portfolio where appropriate because I see the opportunity there. So it does not one way or the other affect returns any more than any other investment. But it does affect your connection to your money, which this is a personal belief of mine. The more connected you are to your money, the more likely you're to be successful. There's something about it. The intention becomes aligned with your intention. It's not this random thing over here sitting on a side neglected and not aligned with your goals. Next round of stimulus I talked about, so I will go past that one. How will the Green New Deal or climate change impact the economy? Well, I talked about climate change, Green New Deal. It's really way too soon to even know what that will look like. I do think if Biden becomes the president, that there's definitely going to be a big focus back on that space. But ultimately, there's one thing about talking and there's another thing about doing. So not knowing exactly what the Green New Deal will be, it's hard to say what the impacts will be. But we've shown through COVID that we can do some pretty extraordinary things in this country when our back is to the wall. And think about that just for a moment. Regardless of your feelings towards climate change and the environment, when COVID came to our shores and we had to take action, we did things. If someone had told you back in January or February what we would be living like in April as a nation, think about that. Quarantine, so isolated at home, shelter in place, working from home, kids pulled out of school, no travel, wearing the masks, socially distancing. You would have thought someone it was some dystopian horror film, right? It was just so outside of the reality of something that we would ever do or experience in our lifetimes. And yet it happened. So just kind of opens your mind to what is possible, what we can do. America, oddly, is really good when our backs are shoved against a wall at figuring stuff out. It's pretty amazing if you look back at the history of the things that we've been able to accomplish. So I actually would say there's more likelihood that people seriously consider some pretty radical changes of any kind post-COVID than they would have before, because we've shown we can do some pretty amazing stuff. Again, not for the most positive reasons, but yeah, we did. I mean, we did do some major social change around that. Excuse me. Extra says, how can I get my kids to be financially knowledgeable? I don't know who put these questions in because they were just put together for me by accumulation of everything that was sent in. I will give you a couple ideas. There are some really, really good books, but I totally understand that teenagers and 20-somethings, not all of them like to read books. They like things more digital. If I get the response to this, I kind of putting out the feelers right now, I would love to do one of these webinars. I'll probably do it in August, right before school goes back, and kind of design it more towards, think of a fun name for it, but financial literacy for teens and 20-somethings. Because the reason being, and what captivates them, I've done these live quite a few times, and it's been pretty popular. But the design of it is more, and it kind of circles around their freedom, because that's something that every teen and 20-something really values is their freedom. About understanding money and how it works, not the simplistic version and not, what stock to pick, but just really understanding money and how to be efficient with it, especially around Roth IRAs and their first jobs. And it's something, the reason I like the idea of the webinar is it'd be really cool because the parents can be in on it too. Or parents can watch it and say, hey, this is good, give it to the kids later. So I'm really thinking of doing that. So give me some feedback on that. If you can, email me, email the person who gave you the invitation. I'd be really open to putting one out as one of these webinars. And I'll probably do it separate from the economic one, or I'll do the economic one super short because different audiences. But I'm more than happy to do that. I think it's a really good thing because they're hearing it from me and not their parents. I do my best to make it fun. And also it's video, it's not reading. But if you do want some great books for different age groups, I can give them to you. Just reach out to me. Okie dokie. How do you model projections with so much uncertainty? I talked a little bit about that earlier. There's tons of data out there. I pay a lot of money for a lot of good stuff, but a lot of the data is just out there. You just have to collect it. And it's not the data you traditionally look at because so much is societal and so much is moving behind. It's kind of like, you see the surface of the water, but you don't see what's running underneath it. And it's really important to see what's running underneath it because it's showing you things before they happen. It's showing you the risks, and it's also showing you the recovery stage, right? But more important than just the economy, it's things that are happening. Everything impacts something else. So there's, when I'm going to talk about some of the upcoming one because of time today, there's some pretty amazing stuff that's coming out there that can help, I won't say fix, but significantly change the income inequality problem that we have in this nation. Because it's a big problem, and it doesn't matter which side of the problem you're on, it's a problem, okay? And it's going to be a big problem for everybody. And there's ways to balance income inequality without having to take money from one group to give to another group, okay, unwillingly. There are ways to do it. There's some fascinating stuff that's out there. I'm looking forward to sharing it. If you want to just get a little taste, if you want to do your own research, look up Universal Fund, okay? The concept behind this is there's a fund that's put together. Okay, I'm going to really quickly go over this, so I'm not going to get all the details right. I'm just going to get set up by the government. What seeds, and anyone can sign up for this fund, okay? And anyone signing up for the fund will get income. You know, basically they have an investment, and they'll have a guaranteed income depending on how much is put in the fund. The fund is actively divided out. The value of the fund, the number of participants. There may or may not be some limitations. If you have a certain net worth, you can't sign up or something like that. I don't know, because again, this is in formulation, but there's some really smart people working on it. How the fund gets its money, not from taking it from anyone, okay? Not taking it from the taxpayers necessarily, not taking it from corporations, not taking it from wealthier individuals. How about tax breaks for donating to the fund? So what corporation isn't going to want to do a great social justice action and get a tax break by funding it? You can easily fund it through these things. Again, I'm not going to get all the details of it. I wanted to touch upon a high level. Every single person registered, it's all divided equally. There's no cost to register. I'm going to use the thing U.S. citizen, and who knows if it's extended beyond that. But there's a lot of really, really smart ways to give people that have very little to nothing an opportunity to benefit from the growth of this nation and the growth of companies within this nation, and not have that separation when so many are missing out on growth because they don't own assets, don't own property. So I'm just sharing that little tidbit out there because there's a lot of phenomenal things that are taking place right now. There's a tremendous amount of optimism. We do and will need to get ahead of the inequality issue. Economic inequality issue for the good of this nation, and there's a lot of smart people working on it. Perhaps that'll be a whole webinar on its own. Okay, last couple questions, and I'm going to talk about the upcoming webinars. It says latest research strongly suggests protests are not the primary cause of the outbreaks. Exactly. I truly have no idea, and I think as to what this individual here posted, there's no way of knowing, but it's like I said, anytime you have crowds of people. But also, I would say that protesters are outdoors, so outdoors is lower risk than indoors. But certainly beyond my expertise, I have absolutely no opinion. The only thing I can say that we're seeing across the board globally is crowds of people, or the risks are higher. But again, you know, they interviewed actually, I think at one of the protests, they interviewed one of the young people protesting and said, "Are you concerned about getting COVID?" And they said, "The cause is too important. I'm willing to take the risk," or something along those lines. And that is a really good thing to think about. That they understood the risk. They were willing to take the risk to protest because they believed the cause was that important. That is happening every time you get together with people that are not in your household to have, you know, drinks and a barbecue at your house. Every single day, people are making decisions, what feels comfortable or safe or right for them and the ones they love. Every single day, and that will continue because there's only so long people will stay fully isolated. Society will stay fully isolated. How do we know to vote on various company investments when we receive the ballots? Vote on the board, talk to you. I usually say there's a lot of proxy votes out there, and some of them are really inconsequential, but the law states that you have to get them. Others could be a topic that you have yourself a strong opinion on. If you, and I know in the case of the person that typed this is a client, if you have questions, talk to me, and I'll let you know. Talk to me, and I'll let you know. Here's how to do it if you want to do it. Here's kind of how much effect this may have. I'll give you a lot more colored information. I get all the proxies, so I'm able to talk to you about them. That is the one thing when you have the funds and you look at that, you can see how much it matters to you. But certainly look at them and see if it's something that's interesting to you. So I wanted to talk about two more things while I wrap up. Number one, upcoming webinars. The next webinar that's coming up is actually going to be an update on the economy, a brief update, but then we're going to transition over and you're actually going to get to look at somebody's face besides mine, thankfully. And I'm going to have Katie Linfeld, our certified financial planner at Sequoia, is going to do an update on some new laws that passed this year, specifically around the CARES Act, and before that, the Secure Act, which, by the way, everybody forgot about the Secure Act because the Secure Act passed and then we had COVID. But a lot of new laws have taken place that really impact a lot of investors and a lot of people financial planning. And one example, which follows up to an email I sent out a couple weeks ago, is you don't have to take your RMDs this year. So there's a lot of things in there, and whether you do or don't do all these new things that are available to you depends very much on your individual situation. But I want everyone to get a high level on this because I realize a lot of people have no idea about things that are available to them or things they may want to consider, sort of like an opening around some of the COVID CARES Act. The one after that is going to be, it was one I actually put together. It's on a PowerPoint, so again, much less of Kristina's face. I'm going to do the economic update and the PowerPoint, but this one is really, really fun to think about your relationship with money. I was going to do this in an event, public event back. Remember those days we all got together and people drank wine and anyway, that's clearly not happening this year, so I'm going to actually do it by webinar. This is really good. It's general audience stuff. No one I have shown this to has not gotten something out of it. Okay, so it's really, really good. I might even send a tidbit to see what it's like. And this is also something you can definitely share with other people, definitely share with even younger, the teens and 20s will like it. It kind of makes you think a little bit differently. There's an investing component, a financial component, and overall money and the emotional and energetic relationships and connections to it. It's good stuff. That one's going to be, again, 2 weeks out from that. That's the plan right now. If there's a major change in the economy or something, I may switch that up. But that's just want to give you something to look forward to, hopefully. Finally, closing, I thank all of you very much from my heart for listening to these webinars. I greatly miss seeing you in person. Some of you, yes, are coming back for in-person meetings, but I know for many of you it's not time yet. And I dearly miss you. I dearly miss seeing you and talking to you face to face. I'm thankful that we can still do so by Zoom and by phone, but I do miss you. And I feel this connection to each and every one of you when I'm doing these webinars. And for those of you that don't know me, I thank you for taking the time to listen to me speak. If you find any value or have any questions made in this and wish to talk further, don't hesitate to reach out to the person who gave you the invitation, and we'll definitely connect to one another. I am here to serve. I am honored, deeply honored to be able to serve each and every one of you during these times of great uncertainty. And I so thank you for your confidence in me during these times. And do not hesitate to reach out to me anytime you need anything. I'm supposed to be in Peru right now. Clearly that's not happening, so I'm super available. So let me know if there's anything you need. Thank you all very much. And if I don't talk to you before that, I will see you in 2 weeks. Bye for now.